بسم الله الرحمن الرحيم. إن شاء الله هنستكمل مع بعض محاضرات مادة Accounting for Non-Accountants Lecture 3 واللي هيبقى عنوانها The Basics of Financial Accounting. We learned before that accounting mainly consists of three main basic activities. It identifies, records, and communicates the economic events of an organization to its interested users. We know that users are classified into internal and external users. Today, we are going to learn about the main basic rules for financial accounting. First, we must know what are the transactions we are going to record in financial accounting. Transactions are the business economic event recorded by accountant. Any transaction can be external transaction or internal transaction. External transactions between our business and external parties outside the business. But internal transactions are transactions inside the business itself, like when the business pay salaries, it is an internal transaction. But when our business purchase goods is an external transaction. So transaction can be classified in external and internal. But not all activities represent transactions. مش أي activity performed by the business we can call a transaction that must be recorded by its accountant. Transaction must have an effect on the accounting equation. We use that accounting equation in the previous lecture are assets equal liabilities plus owner equity. That is the basic accounting equation. And there is also another equation, the expanded accounting equation. Any transaction that have an effect on the accounting equation will be recorded by the accountant of the company. So we have transaction analysis. We must first analyze the transaction. For example, if the company purchases a computer, we ask ourselves, is this transaction will impact the financial position, that is assets, liability, or owner equity of the company? If the financial position changed or impacted by the transaction, it will be recorded. But for another example, if our business discuss product design with potential customers, in this case, as no assets or liabilities or owner equity have changed. So we will not record in our books, the accounting books. For another example, if we pay rent, in this case, we'll have an expense, rent expense, and we also will pay cash. Cash will decrease. So in this case, we will record it in the books of our business. So not every transaction will be recorded. It must impact or change the financial position of our company. Financial position, we mean assets, liabilities, or owner equity. But how to record? Mainly, we have various users. زي ما احنا قلنا قبل كده، أنا عندي users who need financial information about our business. External users and internal users. We learned also that we can provide this information using or by preparing financial statement. balance sheet, income statement, statement of owner's equity, statement of cash flow, and the disclosures in notes. But how to prepare such financial statements? How to measure the element of financial statement? We previously talked about the previous lecture. The accounting profession has developed standards. كان لازم يكون عندنا standards أو معايير تحدد لنا how to measure and report the financial statement. It must be generally accepted and practiced. We have here in financial accounting what we call generally accepted accounting principles, GAAP. Generally accepted accounting principles, GAAP, the standards that are generally accepted and universally practiced. These standards indicate how to report economic events, how to report the transactions we will record in our company. But who or what who will issue such principles? We have many standard setting bodies. The most important standard setting bodies universally, like Financial Accounting Standard Board, FASB, and the International Accounting Standard Board, IASB. How to measure and how to report the transactions in financial accounting. We have some principles. Historical cost principle dictates that companies record assets at their cost. يعني لو our business اشترينا asset, how to report it? We will report at cost, the acquisition cost that we paid to acquire the asset. But also, any asset can have another value, the fair value. We have another principle that states that assets and liabilities should be reported at fair value, the price received to sell an asset or settle a liability. But how to select the cost versus the fair value, the selection of which principle will follow the trade-off between relevance and faithful representation. If we are seeking relevance, what do we mean by relevant? Relevant, the relevant information is the information that is capable of making a difference in a decision. لو عندي information هتقدر تعمل difference في الديسيجن هنقدر نقول عليها relevant information. يبقى في الحالة دي لو أنا هدفي هو relevance أكيد هروح أدور على الفير فاليو لأن هو ده البرايس بتاع الأسيت today أو now. But if we are seeking information that is faithfully represented, what do we mean by faithful representation? It means that the numbers and descriptions must match what really exists or happened. يبقى أنا محتاج حاجة تقول لي بالظبط إيه اللي حصل. What really happened. في الحالة دي هبقى أكثر توجها ناحية الهيستوريكال كوست. يبقى الجنرال رول in accounting in historical cost or fair value principle. To what? To measure, to determine the value of the asset. The choice between the two alternatives depend on the trade-off between relevance and faithful representation. That is the two primary qualities that make accounting information useful for decision making. هشوف أنا محتاج إيه وبالتالي هتوجه ناحية الإيه؟ البرنسبل اللي هيحقق الأوبجيكتيف اللي إحنا عايزين نحققه. The main rule in financial accounting is to apply the historical cost. يبقى ال assets in financial accounting will be recorded at its historical cost. The cost إمتى؟ in acquisition date. في وقت الأكوزيشن بتاع الأسيت. أول ما حصلت على الأسيت أنا اتحملت كام؟ It's the historical cost. We have also in financial accounting some assumptions. The most important assumptions first is the monetary unit assumption. This assumption requires that companies include in the accounting records only transactions that can be expressed in terms of money. يعني لو عندي transaction but I can't express in terms of money مش هقدر أحدد لها value using money units, it will not be included in accounting records and it will not be recorded. Another assumption is the economic entity assumption. This assumption requires that the activities of the entity to be kept separate. يعني هفصل ما بين the activities of the entity itself, our business activities, and activities of its owner, and also all other economic entities. طب what to record? We will record activities of the entity, but its owner activities will not be recorded. Other economic entities activities will not be recorded in our accounting record, but will be recorded in these entities accounting record. That is the economic entity assumption. Let's see this question. Combining the activities of Kellogg and General Mills would violate what? لو أنا عملت combination between the activities of two separate entities. أنا كده violate what from the gap اللي احنا اتكلمنا عنه لغاية دلوقتي. We will violate the economic entity assumption. ده المفروض according to economic entity assumption we must separate between the activities of our entity and its owners and also activities of other economic entities. Another assumption is the time period assumption. This assumption accountant divide the economic life of a business into artificial time period. Any business will have a period of time, but when to prepare its financial statement. امتى هعمل financial statement عشان احصل على information. We need time periods and at the end of every period from this period that we called artificial time periods, we will prepare the financial statement. We call this the time period assumption. These artificial periods can be month or quarter, 3 months, or a year. This assumption also called the periodicity assumption. Monthly and quarterly time periods we call in accounting interim periods. The periods less than 1 year we call interim periods. Most large companies prepare both quarterly report and annual financial statement. but the main financial statement is the annually financial statement. The annual financial statement means that it is prepared for a 1 year. If 1 year started from January 1 to December 31, we call it a calendar year. Fiscal year, the year that we prepare financial statement for, may be the same as calendar year if it is started in January and ended by the end of December. But it could also be different. بعض الكومبانيز ممكن تعمل financial statement starting in July and ended in June of the next year. It is a complete year, 12 months. But in this case, we call it fiscal year, and it is not always equal to the calendar year. They will be equal if the company fiscal year started January 1 and ended by the end of December. The time period assumption states that which choice is true. According to time period assumption, the economic life of business can be divided into artificial time periods. And at the end of every period from these artificial time periods, we will prepare the financial statement to provide information about the business. In financial accounting, we have two bases to record revenues and expenses. Recording can also be referred to as recognition. So when we say in accounting recognize, we mean record. According to the first base, the accrual basis accounting transactions recorded in the periods in which the event occurred. When the event happened, we record. According to this base, revenues will be recorded when we perform service. If companies perform services, it will record rather than when they receive cash. يعني لو البيزنس بتاعنا قدم السيرفيس اللي من خلالها هيحصل على revenue سواء حصل cash collection or no, we will record it now in this period according to the accrual basis. Also, expenses will be recognized equal recorded when incurred rather than when paid. This accrual basis is in accordance بيتفق مع generally accepted accounting principles GAAP. So in financial accounting, we in fact apply the accrual basis accounting. The other base is the cash basis accounting. According to the cash basis, revenues recognized when cash is received. Also, expenses will be recognized when cash is paid, and so it is not in accordance with GAAP. So with GAAP, we are apply the accrual basis. The cash basis is not in accordance with GAAP. According to the accrual basis, we have two principles. Principle for revenue recognition and another principle for expense recognition. The revenue recognition principle states that revenue will be recognized in the accounting period in which the performance obligation is satisfied. What do we mean by performance obligation is satisfied? Our business or company have customer requests. Customers request a service. When our company satisfy this obligation, we will recognize the revenue without waiting for cash received. يبقى revenue will be recognized when performance obligation is satisfied in accordance with the accrual basis of account. Also, the expenses. Expenses will be or matched with revenues in the period when the company makes effort to generate those revenue. أنا عشان أعمل satisfy للobligation تجاه الكاستمر هحتاج إن أنا أتحمل some expenses. We will match the expenses with revenue. So expenses will follow the revenue. Will first recognize revenues, then we will match it or follow it with the expenses needed to generate those revenues. We call this the matching or the expense recognition principle. One of the following statements about the accrual basis of accounting is false. We have four statements. One of these related to accrual basis of accounting is false. A. Events that change company's financial statement are recorded in the periods in which the event occurred. Of course, it is true, not false. B. Revenue is recognized in the period in which the performance obligation is satisfied. This is also true. The accrual basis of accounting is in accord with generally accepted accounting principles. Also, it is true. Revenue is recorded only when cash is received and expenses are recorded only when cash is paid. Of course, this is false because this statement is about the cash basis, not the accrual basis of account. Now let's see some questions on our lecture. First, the true or false statement. Number one, the hiring of a new company president is an economic event recorded by the financial information system. لما الكومباني will hire a new president الكرايتيريا بتاعتي will the financial position affected? No. In the hiring date, no effect. It will be affected in the future when we pay his or her salary. But now, no effect. So it is false. Will not this transaction will not be recorded. Number two, the economic entity assumption requires that the activities of an entity be kept separate and distinct from the activities of its owner and all other economic entities. Of course, it is true. Number three, the monetary unit assumption states that transactions that can be measured in terms of money should be recorded in the accounting record. This statement is true because we are talking about the monetary unit assumption. Number four, the cost and the fair market value of an asset are the same at the time of acquisition. To this point, the statement is true. At the acquisition time, the cost of an asset equal its market value. And in all subsequent periods, Now the statement turned false. Number 5. The time period assumption states that the economic life of a business entity can be divided into artificial time periods. True. Number 6. The time period assumption is often referred to as the expense recognition principle. False. The time period assumption is often referred to as the periodicity assumption. Number 7. Companies' calendar year and fiscal year are always the same. Of course, false. Sometimes they are the same, sometimes they are not. Number 8. Accounting time periods that are 1 year in length, 12 months, are referred to as interim periods. No, false. Interim periods is the period that is less than 1 year, monthly, quarterly, semi-annually are interim periods. 9. The cash basis of accounting is not in accordance with generally accepted accounting principles. True. 10. The revenue recognition principle dictates that revenue be recognized in the accounting period in which cash is received. False. The revenue recognition principle will recognize revenue when performance obligation satisfied by the business or by the company. Now let's have a look on some multiple choice questions. Number 1. Accountants refer to an economic event as economic events in financial accounting we call transactions. Number 2. The historical cost principle requires that when assets are acquired, they be recorded at. According to historical cost principle, assets will be recorded at cost. Number 3. GAAP stands for what? Generally accepted accounting principle. 4. Financial information that is capable of making a difference in a decision is relevant. Number 5. A basic assumption of accounting that requires activities of an entity to be kept separate from activities of its owner is referred to as the economic entity assumption. 6. Monthly and quarterly time periods are called interim periods. 7. The time period assumption states that. State what? Time period assumption or periodicity assumption. That assumption that divide life or economic life or business into artificial time periods to prepare financial statements. So the correct answer is D. Number 8, an accounting time period that is 1 year in length but does not begin on January 1. We refer to as a fiscal year. 9. The time period assumption is also referred to as periodicity assumption. And finally, number 10. Which of the following is in accordance with generally accepted accounting principles? Only accrual-based accounting that is in accordance with generally accepted accounting principles. And by the end of our third lecture, thank you and see you next week. Assalamu alaikum wa rahmatullah. وبركاته.